Welcome back. In today's video, we're going to be exploring what is going on with Bitcoin and more specifically Ethereum, as we are, in my view, at the end of the Bitcoin cycle. And this is based on the Bitcoin halving tracker, which we show on this channel quite often. But there's a lot of other things going on, some of which we're going to be talking about a little bit later in today's video, and some that we're not, including the AI pivots from Bitcoin mining companies. And now we're hearing some of these companies are receiving partner deals with some of the large AI corporations. And what does this mean for Bitcoin as they are exiting the Bitcoin mining ecosystem? And more specifically, what does this mean for Ethereum, which did hit new all-time record highs? We know that it hit just basically about $5,000 and then came down, but we are seeing a lot of accumulation from these large Ethereum treasury companies. And what does this mean for the price? What does this mean for the cycle? Are we at the end of the cycle? And by the way, I look at every asset independently. Yes, generally speaking, when crypto moves into a bear market or Bitcoin moves into a bear market, the rest of the market does follow at some point. But there may be a disconnect now that Ethereum is becoming part and is being integrated with the traditional financial stack, and they're using blockchain, they're using DeFi, they're using stable coins. So what does this mean for Ethereum? Make sure you guys are subscribed to the channel. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. And give the video a thumbs up, hit the subscribe button, and let's get right into today's topics. Now, we're going to be starting right here because what the Federal Reserve is doing from a liquidity standpoint is very, very important to understand where Bitcoin and where crypto and where stocks are going. So we now heard from the Federal Reserve in the end of 2025 that they're going to be basically ending quantitative tightening, which is the reverse repos, which sucks liquidity out of the lending markets. And it looks, based on what we're starting to see, that the Federal Reserve is beginning or getting in the early stages of beginning quantitative easing, which effectively means money printing, injecting liquidity into the markets. And so a lot of people in crypto, remember what happened at the beginning of the pandemic when they printed $4 trillion. The repo operations were going to almost like hundreds of billions or trillions each day. And you can go back to my videos from 2020 and look at those, that situation there. But a lot of the crypto market are ignoring the cycle. They're ignoring the Bitcoin halving tracker, the Bitcoin halving cycle, and they're just looking at the Federal Reserve starting to inject and effectively stating they're going to end quantitative tightening. But you guys have to remember that this happens in a rotation, and it's not a light switch. This is what a lot of newbie investors, especially like the Wall Street bets or people who get angry when somebody says they sold their crypto, they're like, how dare you, you're an idiot. These people have no idea what is going on in the markets. Most of my viewers, most of you guys understand how this all works, but there's a rotation phase, right? When we are exiting euphoria and moving into complacency and then anxiety and basically the downward trend in the markets. People say, but Cryptoviser, I didn't feel euphoric. So we're not in the euphoria phase. We're still down here in the optimism phase. And it's like, the market doesn't care how you feel. The market is based on what the market feels, right? And so when we see companies like, for instance, BitMine Emergent Technologies, right? When it pumped in the middle of the year, when they made the announcement that they were going to start buying Ethereum, that was euphoria. I mean, you can clearly see it on this chart. We bounced up, came down. People were like, oh no, we just need some more time to cool off and then we'll have another pump. And they're still chasing that high from the middle of the year, which we may never hit ever again, or we may not hit in this cycle, right? And so that doesn't mean that you can't make money in the markets. And that's what this channel is about. We're here to make money in the markets, and there's nothing wrong with that. And so understanding how the cycles work, understanding there's going to be volatility, we have to play that, right? We have to trade against the bulls that are bullish no matter what happens in the market. And so what exactly is going on here with the Federal Reserve injecting liquidity? Well, basically, the Federal Reserve pumped almost $30 billion into the banking system at the end of October, sparking optimism on crypto social media, while the move aimed at easing liquidity concerns is supportive of risk assets, including Bitcoin. It's nothing out of the ordinary. Yes and no. For the last few years, we've been seeing reverse repos. This is the repo, not reverse repo. Reverse repo undoes the repo. The repo injects liquidity. The reverse repo removes or extracts the liquidity from the markets. And so, yes, generally speaking, when they are injecting money into the repo operations, this is bullish, but not bullish overnight, not even bullish necessarily in the next few weeks or months. As I've been laying out on this channel in terms of how I believe the cycle is going to, and is, by the way, playing out. It's not just necessarily that I think it's going to play out this way. It's literally playing out this way. Everything that I've said is going to happen has already happened. We know that the Federal Reserve Chairman Powell, his term ends in April or May of 2026. This is, in my view, going to be the bottom of the cycle, the bottom of the market, the macro market, right? May not be specific to your crypto or specific to Bitcoin or to the day, but generally around that time frame, that's going to be the bottom of the market, which by the way lines up with the last cycle, because in the last cycle in 2021 we topped out in November and we bottomed out in June of 2022. Most of the YouTubers here were saying, oh, well, we're going to have an extended cycle and the top of the market is going to be June of 2022. Well, that was the bottom. Okay, that was the bottom. And so if we think about the Bitcoin date, the Bitcoin halving date in 2021 or 2020, whatever it was 1 or 2 months after what it was this cycle, right? The cycle's 4 years, but it's actually a little bit less than 4 years. So basically every cycle is a 1 month ahead. So if we bottomed out in June in the last cycle, that tells me we're probably going to bottom out. Again, not just based on this specific metric, but based on a lot of different factors, probably April, May. And the Federal Reserve Chairman is going to be replaced in around that time or before. And so I don't believe that Chairman Powell is going to just like pump the markets full of liquidity immediately, right? He's going to let this linger because he's playing the game too, right? And he knows that there's going to be a predecessor who's going to come in and he is going to do something completely different than what Powell's doing regardless, right? And so that puts us into a little bit of an extended place, but crypto social media, they love this. They're like, oh, you see, the Federal Reserve is already pumping money in. Cryptoviser, you were wrong. We're going much, much higher, much, much higher. Even though we have to go lower before we can go higher. And going from $126,000 to 100 whatever $1,000, that's not lower. We have to retest significantly lower levels and potentially the previous cycle's high and potentially go below that. The previous cycle's high was about $70,000. That's also MicroStrategy's buy price. And so if we go lower than that, that means we're going to be in the $50,000 or $60,000, potentially even lower. And by the way, the more you hear people saying that's never going to happen, we're never going to go back down that far. We haven't even hit euphoria because I don't feel it. Yeah, that is what we trade against. Until people are bearish on the market, which they are nowhere near, we don't buy in. That's my viewpoint, specifically on Bitcoin, right? And so understanding that, the repo operation, conducted via the standing repo facility, temporarily boosted cash available with primary dealers and banks and aimed at adding short-term liquidity into the system, lowering repo rates back towards normal levels. Now, I want you guys to keep in mind, in 2019, in September, that's when the Federal Reserve started their repo operations. That was about, 9 months before the pandemic shutdown. It was about 1 year before we really started to see Bitcoin moving to the upside with any actual breadth, right? And so that's really important to keep in mind as well. There are always lag effects. Most of YouTube, most of the influencers out here, they're saying, nope, we're going much, much higher immediately because the Federal Reserve is injecting liquidity. Well, you can believe that if you want, but I just think that it's wrong, and I'm going to be proven correct here. And that brings us to Ethereum, because we talk a lot about Bitcoin, but in my view, like the Bitcoin trade is over for now. It's over. Not forever, but for now. Now, the reason I say the Bitcoin trade is over is because of many different factors that we've covered on this channel, but we really have to like ignore Bitcoin for a while, right? A lot of people who are invested or were invested or are Bitcoin maxis, they're never going to think that we're in a bear market. So they're going to say, oh, that drop at the beginning of October, that was the bear market. We're done. No, no, no. The bear market lasts for at least from the top of the market to the bottom of the market, at least 1 year. So we have time before we re-enter. Now we could swing trade Bitcoin, but again, there's more downside risk than there is upside risk. But with Ethereum, we really haven't seen that big of moves. Meanwhile, we're seeing Ethereum stablecoin volume hitting record $2.8 trillion in October. These are really big numbers. This is a lot of throughput of stablecoins on the Ethereum network. But when we look at the Ethereum price, we're actually trending down. This was, look at all these pop-ups. This was in August of 2025, when we hit basically about $5,000 all-time record high, which was slightly above the previous all-time record high, but not by much. And this is what we've seen in a lot of altcoins. Litecoin did this in the 2021 cycle. It went basically up to its all-time record high and then straight back down. It barely did anything more than that. This cycle, there's a lot of cryptos that we've talked about previously on this channel that they haven't even hit their all-time high, or they went a little bit above their all-time high and came right back down. Solana included. Solana's all-time high was 250, 260. We hit 280, 290 this cycle and came right back down. And the reason is because there's more players in the market and there's more players that want to exit, right? And so the more that people want to exit, the longer they wait, the lower the price goes, right? So at the beginning of this cycle, beginning of 2025, people were talking about Bitcoin hitting 500,000, 450,000, 350,000. Now people are like, well, hopefully we're going to hit 180,000. And some people are like, hopefully we're going to hit 140,000. And it's like, I mean, their goalposts keep moving. And with Bitcoin and Ethereum, it's moving closer. I mean, Ethereum, including myself, I thought Ethereum was easily going to hit $10,000 this cycle. But again, we have to think about market psychology. If everybody thinks it's going to hit $10,000 and that catalyst, which was the Ethereum treasury companies popping up like Bitmine Immersion Technology, SharpLink, and all of those, everybody thought that was going to pump the market, but it didn't. Why didn't it? Well, the Ethereum treasury companies were buying the Ethereum from early investors, like people who've been holding for years or decade or at this point. And so these were all private sales. And so we didn't actually see massive moves to the upside. Meanwhile, now at the end of the crypto cycle, in my view, Coinbase is buying Bitcoin, right? They bought the most they bought in a while in October, which basically I believe was the top of the market. Coinbase is also buying Ethereum at the top of the market. And when we look at the validator queue for Ethereum, this is something a lot of people and a lot of YouTubers are not talking about. I started covering this back in basically August, when there was a lot of Ethereum liquidity that dried up after these Ethereum treasury companies were buying all the Ethereum. And then we started to see exiting from staking. Now, there's only really one reason that you're going to exit staking, and it's to sell, right? Sometimes it's to move wallets. Sometimes it's to, move into, but there's liquid staking protocols that you can have your coins and still do other things like DeFi while still staking your coins. So when we see this exit queue, which started basically in September, you can see that on the chart here. Beginning of September, end of August, we saw this big spike in exiting. And we also saw this big spike in wait times. So in basically the beginning to middle of September, we started to see this spike, and it went up to about 45 days, which is about a month and a half. A month and a half after September is end of October, early November. And so now we're when I'm recording this, the beginning of November, mid-November, and all the Ethereum that was being unstaked just a few months ago, now it's starting to be unlocked. And so we have to look at the entry queue to see how much of that Ethereum is being restaked. Because if it's being bought up by the Ethereum treasury companies, it's going to be restaked. If it's not, we're not going to see it restake. But we could, number one, continue to see over 2 million Ethereum exiting in the exit queue. You can see that, again, it spiked up here. At the beginning of September, 2.6 million was in the exit queue in September, and it's basically stayed there. Meaning there's Ethereum that's getting unlocked and more Ethereum that's entering the exit queue. This is both a double whammy. Now, we have seen an increase in entries into Ethereum staking. So we know that there is some Ethereum that is getting restaked, which to me says it's just being moved to wallets, it's being moved to other Ethereum longer term holders, or it's being put into these Ethereum treasury companies or Ethereum staking mechanisms, but not all of it. And so we think about not all of it is being restaked, right? Basically about 60% is being restaked, but where's the other 40% going? Well, to me, it's getting ready to be sold. But if there's no liquidity in the markets, right, these Ethereum treasury companies are starting to slow down in their purchases. Well, the price goes down, and especially when there's way more supply. And listen, there's going to be people who say, "But Cryptoviser, look at the amount of Ethereum on exchanges. It's at all-time lows," or whatever the metric is at this point. I don't know, and I don't really care. That's not what I'm looking at. I'm looking at where we are in the cycle versus what all of the other cryptos are doing. Most cryptos are not at all-time record highs. Most cryptos are not continuing to move to the upside. And this is where in the cycle we're in the complacency phase, where everybody's just waiting for that last pump, right? I told my viewers just the other day, there was a video on, I think it was called the Cryptoviser Channel with Rand Neuner, and he was talking to another YouTuber, and they were both joking around saying like, "Oh, I hope there's one more pump because I need to exit some of these coins." And it's like, yeah, but everybody's expecting another pump to exit their coins. That's how you know we're not going to have another pump. Even in the middle of 2025, I told my viewers, like there was an episode of Dave Ramsey where somebody called in and they were like in debt, but they had, $100,000 in crypto. And he's like, sell the crypto and pay off the debt. And she's like, yeah, well, according to what everybody's saying, we're going to have one more pump at the end of the year, and then we could sell at double the price, and then we can pay off and still have some of our crypto investments back. And he's like, yeah, but that's if that happens. And she goes, yeah, well, according to what everybody's saying, everybody's expecting that. And I'm like, listening to this, like, these are signals, right? Whether it's a real episode or not, I don't know, but this is the psychology of a lot of people who think about how these markets operate, right? And so when we're looking at the Ethereum price and the Ethereum price charts more specifically, it doesn't matter that we think it should be $10,000 because it probably should be, right? It matters what the market is doing, right? We don't trade the market that we want, we trade the market that we have. And if we look at the market from basically July and August, July is when I call the Bitcoin top because of all these Bitcoin treasury companies, and all these Bitcoin treasury companies, most of them are down 97% just in 6 months. And Ethereum lags Bitcoin a little bit, and sure enough, it did. Then we got basically the top in August. And since then, we've had lower highs and lower lows. This is indicative of rotation into a bear market and the complacency phase. One more pump and we'll all be rich. One more pump and we can all exit the markets. One more extended cycle pump and we're good. Well, what if it doesn't come? Meanwhile, we're hearing BitMine Immersion Technologies, this is Tom Lee's company, is continuing to buy more Ethereum. Tom Lee's company, BitMine Immersion Technologies, BMNR, on the stock market. You can see here again the pump and then sideways trading ever since. It has a little bit of an upside swing, but the highs continue to get lower and lower and lower on BitMine's chart. Even if you just look at the 6-month chart, this high is lower than this high is lower than this high, and it keeps going lower and lower, right? These are indicative of bear market rotation, right? We're not in the bear market yet, but we're rotating into the bear market, meaning there's more downside risk than there is upside reward. So BitMine is continuing to buy more and more Ethereum. Just at basically the beginning of November, BitMine provided its latest holdings, $14.2 billion in total crypto and moonshots. That's an ETF of Tom Lee's company. 3.4 million Ethereum at $3,900 per ETH. Okay, when I'm recording this video, they're already underwater. We're at $3,600. This is an issue. This is a huge issue. Maybe not right now because they can continue to dollar cost average down if they can raise more money, but they're already under their buy price. Almost every Bitcoin treasury company outside of MicroStrategy is under their buy price. And we have barely even dropped. Just to show you kind of the price movement here, in June, before these Ethereum treasury companies popped off, the price of Ethereum was at $2,000. So it went from $2,000 to $5,000 over the course of 2 months, more than doubling the price just from all of the euphoria in the markets. The euphoria about, oh, we're going to get rich because all these companies are going to buy Ethereum. Yeah, but they bought their initial amounts, and we haven't really seen them buy that much more. I mean, Bitmine has 3.3 million Ethereum, and they started buying the same time that SharpLink, which is Consensus's company, started buying. And Consensus still has less than 1 million. And I remind you, ETHZilla, which is another Ethereum treasury company, they just sold a large portion of their Ethereum so that they can buy back their own stock to bring the MNAV back to correction. And so these are all fairly bearish sentiment and fairly bearish signals about where the market's going. That doesn't mean that Bitmine is going to stop buying, but that doesn't mean that the price is going to go up, because Bitmine may be buying, but ETHZilla is selling. That's an issue. And so that's kind of where we are in the cycle, guys. And again, Bitmine has been buying almost every single week in October into November, and the Ethereum price continues to drop, because it doesn't matter what you think or what Tom Lee believes or where the price may or may not go. What matters is where the price is going. And we have lower highs and lower lows. And so generally speaking, this is bearish. It's bearish for crypto. It's bearish for Ethereum. It's bearish for Bitcoin. And it's bearish for the holders who don't even see where we are in the cycle. And they're like, well, I don't feel that it's euphoria. Well, I'm trading against you, because I don't care how you feel and I don't care how I feel about the markets. It's how the market feels. And again, more than doubling the price in just a few months, because basically just because of the Ethereum treasury companies, that is euphoria. That is market euphoria. And if we zoom it out even further, in April of 2025, we were at $1,400. So from $1,400 to $5,000 is more than a 3.5x. Now, granted, you may not like that number. It may not be as high as you wanted it to be, but that's what the market did. And there's very few assets that do that kind of return. And remember, once Wall Street is involved, these ridiculous gains that we were seeing in crypto are going to be diminishing, as we've covered in my video called Bitcoin's Diminishing Returns. I would definitely recommend watching that. And so that's where we are in Bitcoin and Ethereum. Let me know what you guys think down below. And we are now going to transition into the Bitcoin mining companies that have now pivoted to AI and what this means for them. And by the way, don't forget to give this video a free thumbs up. Also hit the subscribe button. That way you never miss a new video. We upload every single day to bring you the latest happening in the financial world. And now these AI pivot companies, there's a lot happening with them, and there's a lot of excitement going on with them. So Cypher Mining provides their third quarter update. Now, they have now announced a 15-year data center campus lease with Amazon Web Services to support AI workloads. And this is huge. It's a big, big deal. And why is it a big deal? Well, we know that these companies that are pivoting to AI, the real big value prop for these companies is partnerships with these large AI companies, right? For their energy and all of that. And so let's understand a little bit more. They said, the CEO of Cypher Mining said the third quarter was truly transformative for Cypher. We executed a pivotal transaction with FluidStack and Google, which firmly established our credibility in the high-powered compute space. We are now following that transaction with another major step forward by signing the first direct lease with a tier 1 hyperscaler. And what is that hyperscaler? Amazon Web Services. Cypher announced approximately a $5.5 billion 15-year lease agreement with Amazon Web Services to provide a turnkey space and for power and AI workloads. Under the terms of this lease, Cypher Mining will deliver 300 megawatt of capacity in 2026, including both air and liquid cooling to the racks. The capacity will be delivered in 2 phases, expected to begin in July of 2026, completed in the fourth quarter of that year, with rent commencing in August of 2026. So within 1 year of me recording this video, that deal is going to be effectively in effect, right? And so this is pretty big. Cipher also announced the formation of a joint entity to develop a 1 gigawatt site named Colchis in West Texas. Under the terms of this agreement, Cipher is expected to provide the majority of the financing, which would result in an approximately 95% equity ownership, assuming standard lease and development terms in the future HPC lease. So they're going for a 1 gigawatt site. We know Bitfarms is doing the same thing. Let's take a look at the price activity. Boom, major jump based on this. Just based on the news, the price of the stock went up 33%. Now, it did obviously come down, and that could be an indicative of, buy the rumor, sell the news type of event, right? And by the way, there's a lot of people who've been in Cipher for, a year or 6 months, and they got in at $3. Now we're at, almost $30. They're going to take profits. Regardless of what you think, they're going to take profits. And so you have to be very, very aware of when you're buying, what prices you're buying at, and what the volatility of these stocks are. Because now it's buy the rumor, sell the news, right? They already announced it. Everybody knows it. It's already priced in. And so if you're buying at these prices, I'm not telling you not to do anything. I don't really care what you do in your portfolio. That's your portfolio. I'm just giving you guys my opinion on my investment thesis and analysis. But if you're buying at these prices, you have to see growth beyond what they've already announced. And that's going to be much harder when they're trying to execute on this Amazon Web Service lease and all the other leases with Fluid and Google's Fluid Stack and Google as well. So we have to be really, really aware of that, because the insiders or the early investors, they're going to be selling into this, right? They're going to be selling into people buying at these all-time record highs, or at least multi-year highs. And you can see this is the banana zone that Raoul Pal talks about. And what we've seen pretty much the last couple of cycles with Bitcoin mining companies is some of them do 40x. I mean, from the March 2025 low of $2, it's already gone up 10x. From 2023 low of 60 cents, it's gone up 35x. And that's the cycle. So if you're buying here, you have to keep in mind there's people who are in from 40x profit already. And they're going to be selling you their stock. Now you could say, well, that's great because they're going to continue to grow. True. But we also have to keep in mind there's a lot of people who think that AI is in a bubble. They're not profitable. Where are they getting all the money from? And all of that. But again, this is not necessarily a bad thing, right? We also are hearing Amazon Web Service and OpenAI are announcing a multi-year strategic partnership. This partnership will enable OpenAI to run its advanced AI workloads on Amazon Web Services' world-class infrastructure starting immediately. So keep this in mind, guys. They are making these agreements with these AI compute companies like Cipher Mining, Iris Energy, Bitfarms, all these companies. And this is very similar to what we saw in the previous cycle with FTX, Voyager, Celsius, 3 Arrows Capital, BlockFi. They were all borrowing money and loaning money to and from each other in a circular financing, they call it. And this has become a big question mark on Wall Street. Is this circular financing actually working? I mean, think about this. OpenAI is going to run their workloads on Amazon Web Service, which is using Cipher Mining and basically paying Cipher Mining to build out these facilities that are going to be in production at the earliest 2020, mid-2026. And in the previous cycle, a lot of these Bitcoin mining companies, they were buying Bitcoin mining machines and prepaying for them at this point in the cycle, at the end of the Bitcoin halving cycle or a bull market. And they were getting them delivered in the middle of or to end of 2022, when these machines were already old, the price of energy was going higher, and Bitcoin was in a bear market at that point. And so these kind of things seem very bullish, but they can also be very bearish because, again, circular financing combined with higher energy prices, combined with all of these companies are going after the same thing, which is more and more energy, and they're doing it in different ways. This could work out very, very well, but it could also be very, very bearish in the medium to longer term if it doesn't work out, if the circular financing collapses, if the premiums of these stocks collapse. Now, I'm not saying it's going to occur. These are just some risk factors we have to keep in mind as we're moving forward. Now, there's also other news like this. Microsoft's $9.7 billion deal with Iris Energy will give it access to NVIDIA chips. And so Microsoft has entered into almost a $10 billion cloud service contract with AI cloud service provider Iris Energy, or IREN, that give it access to some of the NVIDIA chips. The 5-year deal, which includes a 20% prepayment, will help Microsoft as it looks to keep up with AI demand. Last week, the software maker reported its quarterly sales grew 18% to $77 billion, beating Wall Street expectations. Microsoft spent nearly $35 billion in July to September. Remember what I said, euphoria in these markets. They spent $35 billion in that quarter on capital expenditures to support AI and cloud demand, nearly half of that on computer chips, and much of the rest related to data center real estate. They said Iris Energy's expertise in building and operating a fully integrated AI cloud from data centers to GPU stack, combined with their secured power capacity, makes them a good strategic partner. Now, I'm not disagreeing with any of this, right? I want you guys to keep that in mind. I do think that these things are going to be really, really good. But again, you see this major pump right after the news is announced, right? With Iris Energy, it's 20%. With Cipher Mining, it was 33%. And then an immediate reversal, which to me, again, indicates from 2023 lows, Iris Energy was at $1. So Iris Energy is up 50x, 50x, since November of 2023 or January of 2023. So basically almost 3 years. Yeah. And so this is also parabolic zone. This is banana zone. All I could say is, listen, they're definitely pricing the valuations higher. But if we zoom this out and look at these Bitcoin mining companies in the previous cycle, it's kind of hard to see because some of these went public in the previous cycle. But you can see that at the end of 2021, we peaked out in Cipher Mining and then came straight back down. If we look at Marathon Digital, which is the largest Bitcoin mining company and just barely started getting into AI compute, you can see here, let's pull this up in 5-year. You can see in 2021, it massively moved up from basically $2 all the way up to $73, which was a 30x. You can see that right here. And then it came down from a 30x down, it came down basically 94% from November of 2021 to January of 2023, which was the macro bottom for the stock. And then since then, obviously, this 2023 timeframe is when Cipher Mining and Iris Energy were bottomed out as well. So it was the whole sector of these stocks. And I don't think a lot of people are thinking that far ahead. They're just saying, well, AI is going to continue to grow, high power compute's going to continue to grow. And I agree. But right now, there's a huge supply-demand imbalance. And what we're seeing is all these companies are making deals to build out their data centers, build out their compute, build their chip access and all of this. But these things take time. And as they're building these out, there's more and more build outs. So now you have a growth in the supply and the demand, it may slow down, right? Especially how many different companies are going after the same thing. And so once that supply demand imbalance corrects and it becomes balanced, well, it may also go the other way where you have less demand and more supply. And then what happens? Then everything gets cheaper. The valuations may come down. The profits or revenue may come down as well, especially when we're looking at circular financing like this. And so we have to keep that in mind, right? Definitely have to keep that in mind. I'm not saying that this is a non-buy opportunity, but we have to understand the risks because in the previous cycle, most of these Bitcoin mining companies did 40, 50x and nobody was thinking about the risks. And then they went bankrupt, right? We saw Core Scientific go bankrupt, and that brings us to Core Scientific. CoreWeave terminates the Core Scientific deal after shareholders reject their offer. Now, CoreWeave was trying to buy Core Scientific, But the from what I understand, the stockholders, the shareholders of Core Scientific voted at a rate of 10-1 no. They didn't want to be acquired. And this could be good or this could be bad, right? The deal was originally valued at $9 billion, but CoreWeave's stock has declined since the merger was announced. It was going to be an all stock deal. Now, the shareholders probably rejected the deal because they thought Core Scientific should lease their equipment out, lease their operations out. And I understand that. But at the same time, a $9 billion valuation would be, slightly, basically from the middle of the year, significant. Maybe a 3 or 4x in terms of market cap. But you can see that the stock price from the middle of 2025 at the bottom went up 236% in just that amount of time. But this is a huge risk for Core Scientific, because if Core Scientific cannot get a deal similar to what Cipher Mining or Iris Energy get, the deal that they said no to may have been a better payoff than not having a deal at all, especially with the risk factor of energy prices continuing to go up. All of this accumulation, like these large companies, they don't want to own the data centers. They want to own the energy. And so right now they're buying into these data centers that have energy, but the energy may not be theirs. There's a big difference between what Iris Energy is doing versus what Bitfarms is doing. Bitfarms is going after owning the energy. These other companies are going after owning the GPUs so that they can compute. But and this is something Jim Chanos has been calling out. There's a huge depreciation value of those equipment because the equipment becomes old very fast. There's new equipment, and it's the same thing like Bitcoin mining. You have to constantly upgrade the systems. It constantly needs more and more money to keep the business going. And so there's huge risk factors here that a lot of people are not necessarily looking at, while these investors in these companies like Iris Energy and Cipher Mining and Core Scientific, they're already up 10, 20, 30, 40, 50%, 50x just in the last few years. And so if you're entering at this point, you may be the exit liquidity for those early investors who are like, okay, buy the rumor, sell the news. This is the news. Boom, we're out. And it could go up much, much higher. I'm not saying it can't, but I'm saying that there's risk involved. And if you're already up 50x, if you're like, well, I'm going to get 60x or I'm going to get 70x, well, this is when you're getting into the greed zone. And we know you're supposed to get greedy when others are fearful and fearful when others are greedy. Right now, people are getting greedy, so you want to get fearful. And those people who are not getting fearful, well, what's going to happen? Other people will, and they're going to sell, and then they're going to pull everything down. And I'm talking about macro. I'm not talking about specifically Iris Energy, specifically Cipher Mining. But like, if you think about NVIDIA is at, the most valued company in the history of the planet, $5 trillion. Now, this can go much, much higher, but you have to remember they went from 95% market share in China to 0 just recently, and that's not changing. And that's why I think that all of these deals with NVIDIA and around NVIDIA and around these AI companies are starting to pick up, because they're trying to counter this kind of like trade war that's going on with other countries. And whether it lasts or not, I don't know. But whenever you see these like crazy high valuations, NVIDIA is more than double the entire market cap of all of crypto combined. Think about that. More than the market cap of all of crypto combined. It's more than double the Bitcoin market cap, which is unbelievable when they just lost 20 to 30% of their revenue from China. And that's not being priced in. For me, as a more risk-averse investor, that is a concern. And but it doesn't mean it's not investable, right? And then we're hearing about some of these other companies that are trying to become treasury companies. NASDAQ has now issued a warning to the Ton cryptocurrency strategy company over $272 million Ton coin purchase. So Ton Strategy, which is on the open market, Ton X, it's on the NASDAQ, $238 million market cap when I'm recording this video. This is the 6-month chart. Also pump and dump, right? Buy the rumor, sell the news. That's exactly what occurred here. Anyway, Ton's strategy has been reprimanded by NASDAQ over rule violations related to Ton coin purchases. NASDAQ has issued a Ton strategy a letter of reprimand in connection with its $272 million Ton coin purchase and associated private investment in public equity or PIPE financing. According to the NASDAQ, Ton strategy failed to obtain shareholder approval for stock issuance under the PIPE financing to purchase more Ton coin. NASDAQ stated in a filing that the SEC, with the SEC on Wednesday. NASDAQ highlighted that shareholder approval is required when the issuance of common stock represents at least 20% of the company's total shares outstanding. So now you have NASDAQ giving warnings to these companies after they've gone whoop and down, up and down, buy the rumor, sell the news. And meanwhile, with MicroStrategy directly, they're still purchasing. They're still diluting shareholders, and it seems like they're kind of settling in this $40 million per week range, which is much lower than they were buying last year, hundreds of millions of dollars, even billions of dollars on a weekly basis. Now they're kind of settling into this $40 million range. And in my view, and many other people in this market, the analysis shows that a lot of this could have to do with the fact that they're having a harder and harder time finding liquidity in the markets, right? They're still selling their debt vehicles like Strike, and Stride, and they sold 183,000 MicroStrategy shares. So they're still diluting shareholders. Now, it's not as much as it was, but again, Bitcoin price is wavering. We're at the end of the Bitcoin bull cycle based on the days since the Bitcoin halving, and MicroStrategy is continuing to dilute. So what does this mean for the MicroStrategy stock? Well, the MNAV is starting to come down. The price has come down precipitously already. I've told my viewers last month and the month before, since September, that the price of MicroStrategy in September should have been in the $220 range. We're almost there. Now it should be probably under $200 range and probably going much, much lower. But everyone is saying, this is what Brett ETH on X said. He said, everyone is saying, what will happen to MicroStrategy when Bitcoin hits $200,000 this cycle? But no one is asking, what will happen when MicroStrategy when Bitcoin enters the bear market? Well, to Brett, we've been talking about that on this channel pretty much all year, that Bitcoin will enter a bear market. People have been saying, Cryptoviser, you're an idiot. We're never hitting a bear market again. We haven't even hit peak euphoria and all this nonsense, even though we clearly have, based on the charts that I showed you in this video and many previous videos. But what's going to happen to MicroStrategy when Bitcoin enters the bear market? I believe that we're already in the rotation phase to the bear market. MicroStrategy is down 50% from its peak in 2024, and Bitcoin is only down 13% from its peak last month. The momentum is clearly lost and holders are in denial. I would completely agree. And so what is the denial phase? We're down here. I think we're going much lower, guys. And listen, you don't have to agree with me. Go buy. Go for it. Go and buy more. Go and buy more. But there's a lot of people trading against you. And most of those people are probably watching this video and watching this channel right now, because we on this channel have called this. We have been so far ahead of this market, so far ahead for cycles now. In the previous cycle, we called the top of the market. We called the bottom of the market, the FTX collapse, to the day. Now, we didn't know it was going to be FTX collapsing, but we knew that that was going to be the bottom of the market or the collapse. And it was. And while everybody else was freaking out about, oh my God, is Binance going to go down next? Is Coinbase illiquid? Is Grayscale going to liquidate? What's going on in the market? We were buying that drop. We bought the bottom of the market. And now we're selling the top of the market, and people are telling us. They're telling us on this channel in the comments that we don't know what we're talking about, that there's no way that we hit peak euphoria because they personally didn't feel it, and they personally bought at $110,000. And I mean, look at these Bitcoin and Ethereum treasury companies. They all bought the top of the market, and they're continuing to buy the top of the market. I mean, to give you an example, just on this recent purchase from MicroStrategy, their dollar cost average on this purchase at the beginning of November was $114,000. $114,000. Bitcoin wasn't even at $114,000 in the last week of Bitcoin of October. It wasn't even there. So they bought higher than the market actually was. Let's put this on the 1 hour chart because I want to show you guys this. This is how we're going to end the video. Okay. MicroStrategy bought at $114,000. It was right here. So they literally bought the top in that last week and the price went down after they purchased. And it's going to continue to go down because we are at the end of the cycle. Let me know what you guys think in this video about this video. Don't forget to give the video a free thumbs up. Make sure you guys are subscribed. That way you never miss a new video, and I'll see you on the next one. As always, crypto on.